What up, investors? Ken here from Dyslexic Investor, and yes, we're going to be running through some earnings reports today. This is the first video about Apple. We're going to do probably one about AMD and one about some other ones coming soon. It's going to be a very busy week with earnings. Let's go ahead and jump into the one big elephant, the 737, no pun intended, in the room, Apple. So this is ticker symbol AAPL. They reported earnings. They did very well for themselves. Closed out the day at $317.69. And then it went all the way up to $327.90, and then kind of tailed off a little bit, now settling in around like the $322.50 level. Again, huge beat. We're going to be diving into the fundamentals in a second on the wearables, to the iPads, to the huge expansion of revenue of nearly $3 billion over estimate, on how Tim Cook is saying they cannot make enough Apple AirPod Pros and the Series 3 watches, the demand so high coming these past couple months, because the price drop and there's just the increase of these wearables and these smaller Apple products have just grown substantially. So that being said, I wanted to show more on the Apple's technical. So going into the week or earnings, we wanted it to stay above the 306 level to continue the trend. As you see here, it kind of dipped the last 2 days. This gap down was due to the coronavirus, and that has been something that's weighing on a lot of stocks. In particular, mostly the travel and leisure entertainment stocks. Apple is something where you can just order online. It really shouldn't be affected anything. It might be in the short term, it might have its little down days, but in the long run, this should have little to no effect, depending if they have to close the factories due to the coronavirus in China, which I take that back. That could affect them a lot. Wow, I didn't even think of that. Anyways, so that being said, we had a little sell-off into the gap and held the 21, which is what we wanted on the daily chart. This is the exponential 21 moving average for the daily, and it held it very well, didn't close below it, and then we popped up higher into today, and then earnings at basically 25, so slightly above the all-time high. We'll be seeing that on how it opens up coming tomorrow morning and how it trades from there. So on the trend, trend's still intact. We really like it. So let's go ahead and look at the this is the actually from the Apple side. Again, I'll put all these links and so forth in the description down below. And some of this stuff we'll just go over pretty fast. Some highlights here. So there's a 9% from year ago quarter is all-time record, so 9% increase in revenue of $91.8 billion. And this is all what Tim Cook says is, we are thrilled to report Apple's highest quarterly revenue ever, fueled by strong demand from our iPhone 11 and iPhone 11 Pro models at all-time records and for services and wearables. So basically they blew out on all numbers minus the iPad sales, and they recalled that to not having a refresh cycle for a lot of those iPads, but they did drop them quite a bit. I don't know if you guys watched the market on that. They dropped those prices quite a bit for those iPads, like in around the holiday season, like after like Thanksgiving. You can get an iPad for like $300 now with and then a pencil is like $50 or $100. So you can get a nice iPad for $400. Will it replace a full PC? Not really yet, but it does a lot. Here you can see the revenue to return, some estimates here, tax rate, blah blah blah. The dividend's going to be 77 cents per share, and that's going to be paid out on the day before Valentine's Day. And they didn't raise it, so that was what the dividend have been previously this past year. It was actually 73 cents, it looks like, last year, or in 2018. But that being said, 77 cents is what the dividend will be for this coming quarter. They bought back quite a big, hefty chunks of the shares. Here's another report that I was just kind of scanning through. This is from Reuters. Kind of this, basically saying the same thing on Apple is absolutely killing it. They want to add a lot more subscribers to the music, the Apple TV Plus, the gaming stuff by the end of 2020. They want to just basically dominate a lot of those recurring revenue subscription services. Here is Apple posted the $91.8 billion revenue of this quarter, compared to last year's. The estimates for that quarter was 8.85, so they nearly beat it by nearly $3 billion, over $3 billion. Like that's a huge chunk of change, and that's a huge beat on that. And then the strong sales of the iPhone, which is, I think it was 7.8% higher, because again, hinting towards the very strong revenue of the iPhone. And Apple has pushed into paid services, rolling out the credit card with Goldman Sachs. And subscription gaming and television series last year, services revenue was $12.87 billion. And analysts estimated $13 billion, and it was up $10.9 billion from the previous year. I haven't tested out the credit card, so we'll see. So this is the interesting part. The Apple TV subscription streaming video service released last fall has a rousing success, and it's very strong. Both the people that were getting into it with bundling, and then people that were paying for it and haven't bought a new device. So iPhone sales here at 55.96 billion beat the analysts by nearly 4 billion. And sales, that's just crazy how many iPhones they're selling. The wearable segment hit very high revenue of 10 billion. That's nearly a 25%, 30% almost increase. And again, this is what we talked about. Tim Cook, the CEO, told Reuters that Apple could not make enough AirPods and Apple Watch Series 3 devices to meet demand for the previous quarter, and they continued to be on the short side. But he estimates to be able to fulfill the demand for the AirPods starting soon. Again, these are just high quality problems to have, like being able to say, "Hey, I'm not able to meet demand on this," and of course, we have to support TheStreet.com, the boys at TheStreet.com, and the gals. Their 7 takeaways. The iPhone drove much of the quarter's revenue beat, which we did see. It rose basically 8%. The Apple Watch and AirPods had a big enough quarter. Again, the wearables broke 10 billion. Tim Cook saying that wearables they just can't keep up the demand. There's just too many. They're selling like hotcakes. They are taking the account for the coronavirus outbreak into account. So you see in December, Apple's Greater China segment revenue was, after being down 27% from a year ago, was only up 3%. In addition to iPhone wearables, so the active devices installed base has topped at 1.5 billion. This is from the Apple reported their ecosystem a year ago. The iPhone installed base. So basically, how many devices are in the market. And services, business as usual, they said, segment rose substantially. This is a lot of people were speculating that this is going to be literally their overall new thoroughbred of just being able to kick out money. And this falls into the Apple transactions. This falls into the credit card. This falls into a lot of these service-backed Apple Care various devices or services like that. This is again a little bit of the neggier stuff, where it's the iPad and Mac revenue fell. So the iPad actually fell exactly 11%, so about a little under 6 billion, missing by a little over a billion. Mac fell 3%, which is nothing that much. but again, you're talking about a laptop that costs well into the $1,400-$1,500. An iPad is a couple $100. You can get the AirPods for $150. And then the biggest thing, which I actually first time reading at this, is the buybacks. So this is when companies will go in and buy their own stock up. You can see that $20 billion was spent on buybacks in the December quarter, and that was up from $18 billion in the September quarter. So $10 billion was spent by buying 40 million shares via open market transactions. Implied average price around $250. So if we go back to the chart here on the daily chart, so they're saying their average is basically in around the 250 level. So we're looking at like from the previous quarter. So that was like basically end of September. They were just buying a boatload into just propping this up. Most likely, each time it touched the 8 exponential moving average, Apple came in and bought 1 million shares. With not just in one straight order, but they strategically buy these smaller dips and try to take up and buy back. So basically, the reason for it to buy back is to show the market that there's resistance. They believe in the company. They believe that their stock will gain value. So in the future, they could sell it for $500 and raise money, which Apple's not going to need any issues, honestly, to raise any money anytime soon. That being said, Apple to the long side, I would love to see how it opens up tomorrow, how it reacts. Again, it is up nearly $5 in after hours trading. We'll see where it goes from here. I think it could kind of pop off, level off a little bit, and just kind of grind slightly higher, or honestly stay stagnant around the 325 level for some time to kind of see how the coronavirus and how other stocks this coming week report, because this is going to be a huge component within the Dow. So the Dow is going to be up just slightly due to the Dow Jones, that is, to kind of break out here, potentially to the long side, because Apple is a huge component within the Dow Jones. Again, guys, thank you so much for watching. This is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.